Now that we have both of the PCRs done for our company, we can move on to booking all the things that we record in the PCRs in the journal entries. So flipping over to the journals and scrolling up to the top, the very first thing we got to do is put materials on the books. To be honest, it doesn't matter what order you put all of the journal entries in, as long as all the events that occurred during the period go on the books in the same period. But I've always found it easier when I'm recording entries for a production costing report to go chronologically, like what would have happened during the flow of production. And the first thing we would have needed to do was to buy the materials that we were going to use in production. So in our very first journal entry, that's exactly what we're going to do. In journal entry A, we need to put the materials that we are purchasing on the books. And we're purchasing two different types of materials. Direct materials, so things that we can easily trace to the different production departments we have, and indirect materials, things that are used by both of the departments. There's not a good way to trace how much goes into production, which means we're going to need two credits. We're going to need a one credit to capture the direct materials, and I'm going to book that to raw materials inventory direct. And we need a second credit for the indirect materials. So alphabetical order again, raw materials, inventory, indirect. How are we acquiring these materials? We're making this purchase on account, which means we're going to have to pay somebody in the future. So I'm going to have to book it to accounts payable. And the information tells me that we're buying $200,000 of raw direct materials. So that's what I'm going to debit that account for, and $20,000 of indirect materials. So between those two different types of materials, debit's got to equal credits. We're going to owe this vendor $220,000, and we keep that in this entry where we purchased raw materials. So now that we have the materials on our books, we would use them. And in the second entry, we would use them by the first phase of production, which is the breakdown department. So in entry B, I am going to bookkeep the amount of materials that got used by the breakdown department while they were in the process of making things. And like all product costs, when you use materials, it's got to get booked to WIP. You don't get to expense it. So I'm going to debit the WIP subsidiary account for the department that used the materials, which is the breakdown department. And we are using those materials. These are direct materials being used, which means we need to take those off of the books. Well, thankfully for us, all inventory accounts as assets go down with a credit, and I need a credit in this journal entry, so I'm going to credit raw materials inventory direct for the quantity of materials that was used by the breakdown department during the period. What was that quantity? Well, that's why we have a PCR. Make equals in here so I can transfer my debit over. Going to the breakdown PCR, we see that the amount of material costs that were added during the period equals 153,810. So if I debit WIP inventory breakdown for that amount, I put those costs that were added because they were used in production into our inventory accounts, and they can begin to flow through inventory as they get passed between departments and ultimately end up in finished goods. So over here, I'm going to recorded materials used in breakdown. But that's only one part of the cost the breakdown department added. The other part of the cost is conversion costs. So in C, we need to put more cost into the inventory that's being produced in the breakdown department. But still, they're product costs. They still don't get expensed at the time. They have to flow through inventory. So once again, I'm going to debit WIP inventory breakdown. These are for conversion costs, of which there are two different elements to it. One part of that is the salaries of the direct laborers that are converting your inventory into something that you can sell. And the other thing is the allocation from your overhead pool for all of the other indirect costs that you have that you're not tracing to your departments individually. So here we are told to assume that $26,000 of these costs get allocated from the MOH pool. Fair enough. I can go to manufacturing overhead. And the remainder of these are for wages paid to employees. So if they're wages paid to employees, that means that we paid them in, not cost of goods sold, misclick, in cash. And for our debit, we're going to have a debit to WIP inventory breakdown for the amount of conversion costs added. So just like I did up here, I've got to go back to breakdowns PCR and figure out what were the costs added during the period in this department for conversion. And that is 107,610. We're told in the prompt that there's 26,000 of this that came out of the manufacturing overhead pool, we want to have that as a credit because that's the way the MOH pool works. Real costs go in with a debit, allocation comes out with a credit. And then the difference is attributable to these wages that we paid to employees. Well, my debit's got to equal my credits, so 107,610 minus 26,000 equals $81,610 in cash that we must have paid to employees that worked in the breakdown department during the period. And we recorded the conversion costs of breakdown. And now the breakdown department has all of their costs into this inventory that is in a work in process at this time. And when they get done with it and they added all their costs, they would transfer it when they transferred those physical units to the next phase of production. So in journal entry D, I am going to record the transfer between our two different departments. When it leaves the breakdown, it goes into molding. Whatever department is the one that's getting cost transferred into it, you need to increase that asset account for that department. And in this case, assets increase with a debit, so we're going to debit WIP inventory molding. And whatever department it's coming out of, you've got to decrease the WIP account for that department. And assets, if they go up with a debit, they go down with a credit. So we're going to credit WIP inventory breakdown. And this is for the amount of cost that was transferred between the two departments. Well, I can find that on either department's PCR, but I'll go back to breakdown over here. What was the total cost of the units that were completed and transferred out to the molding department to be molded into finished bins? And our answer is 270,000. So in this journal entry, I need a debit to WIP inventory molding for 270 and a credit to WIP inventory breakdown for 270. And here we transferred production costs to molding. And now the molding department has all of this inventory that there's cost into, and they need to add their own unique costs. So we're kind of going to repeat the same process that we just did up here for B, C, and D, but for the second department. E is going to be just like B. We're adding the material costs that were used, but we got to make sure we're putting them in the right WIP account because these are costs not being added by the breakdown department like they were above. They're being added by the molding department. So I'm going to debit WIP inventory molding for the amount of costs that were added. And we're once again using materials that were in our raw materials inventory storage in production. Well, they got to come out of there if we use them. So my credit, just like in the previous department, is going to be to raw materials inventory direct. And here I got to go to the proper department, the molding department's PCR, to figure out what material costs they added. So direct materials added by the molding department is 8,440. Bring that over, and that is my debit to WIP inventory molding and my credit to raw materials inventory direct in this journal entry that we are recording, where I recorded materials used in molding. For F, we got to record the journal entry to account for the conversion cost of molding. And the setup of this is the same. Some of these are coming out of the manufacturing overhead pool, so we're going to need a credit there. And some of these are for wages that haven't actually been paid to employees, so I'm going to need a credit to cash. And my debit, because we're putting cost into inventory, is once again going to be to WIP inventory molding. So one debit to WIP inventory molding, and then credits to MOH, and in our case, cash. So what was the total amount of conversion costs that were added by the molding department during the period? Let's go back to that company's PCR. And the amount of conversion costs that got added by that department were 176,670 according to the molding department's PCR. So I debit WIP inventory molding for 176,670. I am told that $74,000 of that came out of the manufacturing overhead pool up here in the prompt, and that the difference, the remainder, was paid in cash to employees. So what makes my debits equal my credits? $102,670 in cash was paid to employees, and we booked it in this journal entry where we recorded the conversion costs of molding. And now all of the cost came in. Like we started with nothing up on top, just scanning through our entries again. We had the material sitting around in our raw materials inventory, but as we are in production over here, We added some materials and breakdown. We added some conversion costs and breakdown. Breakdown got done. We transferred those costs to molding. Molding added their material costs and their conversion costs in F, and now they're done, which means we finally have some finished sellable plastic bins that we can sell to customers, and we're going to put that into finished goods inventory. And since they're finished, it's no longer a work in process. We don't want to have that cost in our WIP accounts. The last account that it was in was WIP molding, so I'm going to take it out of WIP molding with a credit. And this is for the total amount of costs that we assigned to units, which we finished molding and transferred to finished goods. And I can find that on molding's PCR. The total cost of units that were completed and transferred out of the molding department to finished goods is $480,000. And that is also going to be my credits to WIP inventory molding. And here we transferred production costs to finished goods. And now we've got those costs into our finished goods inventory. We've got some other costs that we need to account for. And this is provided in this particular example, but I'll run us through it over here. We have got to, during this month, record all the actual MOH costs that are listed below. And I got the wrong company name here. Apologize. Let me change that really fast. Account for Rewind Recyclings. Actual MOH costs. So what you're going to do in this instance, when you have actual costs go into the overhead pool with a debit. You're going to have one debit to manufacturing overhead for the total amount of costs that are going to have to go into that pool. And what could the pool cost be? We got the list up here for Rewind. They have some indirect materials costs, some indirect labor costs, depreciation on their manufacturing equipment, rent for their facility, insurance on that facility, and the utilities that they paid at the facility. Well, we're going to need credits to represent these things over here. So starting with materials, the indirect raw materials are coming out of the company's central storage. So you would need a credit to raw materials inventory indirect, there we go, for that amount. We're told over here that all other non-depreciation overhead costs are paid for in cash during the same month. Well, that means that the depreciation cost, this $20,000, would get booked to accumulated depreciation, so that's a credit there. And then for cash, we need a credit to cash for the other costs besides those two items, and that would be the $20,000, or sorry, the $8,000 of rent, the $9,000 of insurance, the $2,000 of utilities. You add those three numbers together, you get 19,000, and then add your last cost, which is the $48,000 for labor, and you have $67,000 of costs that are overhead costs that are indirect that we paid for in cash. So I'm going to credit cash for 67 grand. So that accounts for some manufacturing costs we don't have. The other thing that we got over here are our period costs. And we're going to account for Rewind's period costs for the month by booking a ton of expenses. Why? The other stuff, the materials, the labor, etc., they were production costs, and you can't expense production costs when they happen. They have to flow through inventory. That's why we're throwing all those costs into WIP. But these aren't production costs. These are things unrelated to the production process here at Rewind Recycling, like advertising and anything to do with our administration or the building that they operate in. So for each one of these, I would record the associated debits to that expense account. For advertising costs, I debited advertising expense. For property taxes, I debited property tax expense. For depreciation, I debited depreciation expense. For utilities, utilities expense. And for salaries and wages expense. And this thing says over here for the amount that it was, and it says that all non-depreciation costs were paid for in cash. So I took a $4,000 credit to accumulated depreciation for that depreciation on our office equipment. And the remainder was in cash. So I just added 65,000 plus 5,000 plus 1,000 plus 70,000. And I got a $141,000 credit to cash, which is bringing us now to our sales. We have all of the costs for the period on the books, and we need to sell some stuff, or else we're not going to be able to pay for costs in future period if we don't have any money. In journal entry J, we are told that they sold 55,000 plastic bins, and they sold them at $20 a piece. Well, now that we're selling stuff, that's the point where GAAP finally allows you to expense all of those production costs. So you're going to need two entries here because there's two things that are actually happening. One, you're making revenue by selling all of these items, and two, you're finally expensing all of your production costs. So we actually have two entry J's. The first one records the revenue, at least the order that I have it in, and it says to assume that all sales were made on account and are still outstanding. So I'm going to debit this to accounts receivable. But we still record the sales at the time when the point of sale is made and not when cash is received. So I still get to record a credit to sales revenue. And I'm told in this example that we have got to record the sale of 55,000 plastic bins at $20 a piece. So that's $1.1 million that's owed to us by whomever we sold these bins to. And since we sold them, that's how much we get to record for sales revenue as well when we recorded December sales. The back half of this entry is to record the expense. And the entry is always going to be the same for every manufacturer that you have. Whenever you expense inventory, it is a debit to cost of goods sold over a credit to finished goods inventory. And it is for the cost of the units that you sold. Well, we know how much cost flowed through our inventory, like $480,000 of cost got transferred to finished goods, but that's not how much the units that we sold cost us. To figure that out, we're going to need your perpetual inventory record for what was in finished goods. Very simple, bringing back something from financial accounting here. We are using the average costing method, which means every time we sell a unit, even though some units cost more than others, we're going to assume in this case that the sorry, folks, my reminder is going off on Alexa right now. There we go. We're going to assume in this case that we are going to sell any unit that we sold for the average cost that it took us to produce any one given bin during the period. Well, we're starting the period with 12,000 finished bins at $975 a piece for a total cost of $117,000. We got to add to it what we made during the period. Well, what did we finish during the period? The last department over here is the molding department. And if I go to the molding department, I can see that we finished during the period and transferred a total of 48,000 units. And when I did so, I transferred with them the total cost of 480,000. So going back to my perpetual inventory record over here, we transferred, I'll go click it one more time, 48,000 physical units got completed and transferred out. They were transferred at a total cost of $480,000. For the unit cost, that's just the average. So you take the total amount that you had and divide it by the quantity. We had $480,000 that we spent on 48,000 units. Each one cost us on average $10 a piece. And then over here for inventory on hand, we need to update it. Well, we already had 12,000. And we just finished another 48,000. Let's take the quantity before the transfer and add to it the quantity of the transfer. And now we now have 60,000 finished bins that we could have sold. The old units had cost us $117,000 to produce. These units that we just transferred cost us $480,000 to produce between both departments. That's $597,000 in total. And now, if I do the same thing, take my total cost and divide it by my quantity, we're carrying 60,000 units at an average cost of $995 a piece. And we're to the point in time where we finally could figure out what this entry we're recording cost us. We're selling 55,000 units. How much did each of those 55,000 bins cost us? Well, in the AVCO method, whenever you make a sale, in this case, the sale of 55,000 units, you assume that you sold at your last known average unit cost. And our last known average unit cost was $995. So if we're selling 55,000 units and we're assuming it costs us $995 a piece to manufacture, we get to expense $995 of production costs for each unit sold, and that maths out to a total of $547,250. I'll be thorough and update my inventory on hand over here. We had 60,000 units, but we just sold 55,000. So 60 grand minus 55 grand means we have 5,000 left. All of the finished goods inventory we had on our books had a value of 297,000, but we just expensed 547,250 of it. So we're going to assume those 5,000 units remaining in ending finished goods inventory have cost us 49,750 bucks. And one more time, take your total cost and divide it by your quantity. And we're carrying them still at an average cost of $9.95 a piece. For your totals row over here, it's just the total of what you had during the period for your quantity and your total cost for each section. It's real easy in this case because we got such a small inventory record. We had a total of 48,000 units that got transferred to FG inventory, and they cost us a total of $480,000. During the period, we sold a total of 55,000 units out of FG inventory, and we expensed them at 547,250. And at the end of the period, we have a total amount of 5,000 units left in ending finished goods inventory being carried at a total cost of 49,750. So now back to my journal entry. What did we expense? Well, our debit to cost of goods sold should equal the total cost that we expensed during the sale, 547,250 bucks. And I got a reduced finished goods inventory by that amount. And here we recorded COGS, cost of goods sold, for December sales. So the cost of all this inventory passed through everything. It started just in raw materials and made its way to one department. It made its way to the next department. It made its way to finished goods, and it finally got expensed when things got sold.